Hi there. I welcome you to this fourth session on IFRS 8. I hope this video will enhance your knowledge on segment reporting. In the last lecture, we discussed regarding the operating segments as per IFRS 8. We discussed what we mean by operating segments and how we need to define operating segments. Without any further ado, let's move on directly to the topic of our discussion today, that is reportable segments. What do we mean by reportable segments? What the quantitative threshold being specified by IFRS 8? All of these things we're going to discuss on this video. So let's go. Well, IFRS 8 lays down three criteria to consider an operating segment as a reportable segment: 1, 2, and 3. But before that, I have a small question for you guys. In auditing, we determine materiality to perform our audits. So my question is, what are the different bases that the auditor takes to set the materiality? So the question is basis for materiality. Just pause the video, get your answers, and we're gonna discuss. Just note down your answers and we're gonna collate. So let's recollect. So what are the basically in my audit career I've seen mainly, I'm not saying it's the total, it's basically judgment, mainly three items. That is revenue, your profit, definitely pre-tax profit, and the third one is the assets. In major cases, in not in all cases, in major cases these three items are considered to be material. So so the same is the case with the IFRS 8. This standard considers these three elements of the financial statements to be material for the users material for the users for the purpose of understanding the financial statements. And if certain monetary thresholds criteria being provided in the standards are met, then in such a case an operating segment will become a reportable segment. Now, the point is, I would like to convey one more point regarding the financial reporting framework. There is a concept called relevance, that the financial statement should provide only relevant information to the financial users, to the users of the financial statement. Hence, providing information regarding all and each and every operating segment would not serve the purpose. Hence, they have included the concept of materiality to provide the relevant disclosures in respect of segments only for material segments, that they call it as reportable segment. We will discuss this why I'm calling this reportable. Now let's discuss about the three criteria that is being provided under this standard. The first one is the revenue. If the revenue of the particular operating segment, so we are discussing about operating segments, we take operating segment as a base to consider the reportable segment. If the operating segment's revenue is more greater than or equal to 10% of the total revenue means both inter-segments and external sales. If it is more than or greater than or equal to 10%, then we call it as reportable segment. And these are ors. These are not ands. These are ors. If any of the conditions are satisfied, we call a operating segment as reportable segment. The second point is if the profit or loss is greater than equal to 10% of the higher of either the sum of total profit or loss, total profit for all the segments, or sum of total loss for all the segments. I just give you one example. Suppose the operating segment is A, B, C, D, and others. These are not reportable segments. These are operating segments, and it has a it has a profit of 1 lakh minus 2 lakh, 1 lakh, and suppose 3 lakh. So I will check the criteria for operating segment A. So what is the profit of operating segment A? That is 1 lakh or zero point 0.1 million. And what is the sum of profits for all the other suppose this is 2 lakh. What is the sum of total profit of all the segments? So ignoring the loss, either I will take profit or either I will take the loss. As it is a profit, I will consider it for the sum of total profit. So this is 1 lakh, 2 lakh, 4 lakh, 7 lakh. So what is the sum of total profit of all segments? Because this segment is having a profit, I need to check for the total profit rather than seeking for the loss. So I will ignore this part for the purpose of calculating the threshold. Now I will divide 1 by 7. I think it is more than 10%. You can do the mathematical calculations. Then in such a case, A can be considered as reportable segment. I'm not saying it is a reporting segment. Reporting means we are doing it. Reportable means this is eligible for reporting. The third one, if the total assets is greater than equal to 10% of the total assets, then in such a case we call it as a reportable segments. Now we will discuss in detail when we're gonna discuss on the aggregation criteria why I'm continuously stressing on the word called reportable rather than reporting. So all these checks are being done, and after that, another criteria is set by the IFRS that if the external revenue, ignoring the internal transfers, is less than 75% of the total external revenue of the entity for which we are preparing the segment report, then in such a case, the entity is required to add more segments into the reportable segments so as to comply with the 75% requirement. So, which means if I combine all the reporting segments which is reported in the financial statement, it should and the to in and if I collate all the revenue, external revenue, it will be 75% or more of the total external revenue that has been generated by the entity we are talking about, which means the concerned entity. However, the standard does not specify the criteria to be used to identify reportable segment. One may think that if like we need to follow any kind of order, like ascending or descending order, like suppose one segment was there having 9%, 9.67%, or even 9.97%, the maximum criteria was 9.97. That's why it was not able to meet the criteria, and the entity is required to add a new segment. Then the entities have to add this 9.97 segment. This is not the case here. They can choose any operating segment from here, and there is no specific criteria or order being specified by the IFRS. So they can choose any of the operating segment, provided it in order to comply with the 75% external revenue requirement. So management has a discretion to add any operating segments that they deem fit, and which will provide more clear picture regarding the operating segments and operations, and which meets the core standards or core objective of this standard. So this is the entire structure for segment or a reportable segment. So let's on the next video we will discussing about a practical example, and thanks for watching this video.